teach you guys a simple strategy that you guys can use. And in this video, I'm going to make a strategy as simple as ABC. Because one of the mistakes most of you, my viewers, if you are watching other channels, my advice is just to stay on one strategy. Don't be changing. You get confused along the line. There are a lot of videos on YouTube. So the first step, you can't have all the pairs to trade. My first advice, to keep this video as simple as short, first advice is to pick the pairs you want. Like now, at least you can pick like 5 pairs a month. That's the best. So USJPY no, Jeff no, NZD no, and this one no. You can see what I'm doing. I'm deleting the pairs I don't need, and I still need some other pairs I'm going to add here. That is JPY, and also stocks, and there's no stocks here, so you can see. So you can see the chart. You can see the pairs I picked. There are just 4 pairs, which is the best. You don't need to have all the whole pair. If you are done with this one, you can focus on this one for a month, so you can easily study their movement, and you will see a lot of setup on them. So the first one I want us to pick is GBP USD. The strategy I want us to see there. So the chart is set. So I'm going to make this video very simple as ABC, not complex like most of the videos you guys watch. So the strategy I'm going to be teaching you in this video is very simple. It's simple. It's just as simple as ABC. Simple. It's called normal. I know most of you have heard of it. It's called break and retest strategy. Very simple. It's what most of us use to trade, but we don't have confidence on the trade. So in this setup, you can see that is a buy setup here. Although look at GBP USD, you can see there's a bearish. We're in a pure downtrend, and price retraced a bit from this point to this point. Price retraced a bit. So for break and retest strategy, we make use of key levels. You might ask that what are key levels? Key levels are like at the previous level of resistance that are now broken and retested as support. So in this video now, I'm going to draw one key level for you. So in this case, look, and also we make use of market structure. We know it's a downtrend, fine, but for that point in time, we need to take a buy. Why? Looking at the structure here, price from lower high here, then lower low around there. Then this low was broken again. Price from another lower high, then lower low. Let me mark it for you guys to see it. So you can see this low was broken. So if price had retested it, it will have gone down fine. From this point, the price came back here. We should have expected the kind of reaction that okay, to continue the downtrend, price should have just we're seeing a downtrend to continue the deep sell, price should still go down a bit from this point because this is a key level. Like I said, previous level of support and not resistance. And this is also an example of break and a retest. Price has broken this area and has come back to retest it. But what happened? Price just went down a bit. The price, but if you're a kind of trader that use a proper risk management, which is maybe 1 to 2, taking this trade, let me set this for you guys. Break and retest strategy works almost 50, in fact, 80% to be precise, almost 100%. So remember, this is 4 hours time frame, not daily. If you're a kind of trader that likes 1 to 2, imagine from this area. Risking just how many percent? Not less than 20 pips for this trade. Sorry, no, this is mobile, so I have to make it convenient. So you can see, taking the sell from this point, you're risking just about, you're risking just about 20, let's say 17 pips. In fact, not even up to 16. But let's just say averagely to be safe, let's just say 18 pips to 20 pips from this point. Then we are targeting from this point. You want price to go to this level. Let's say I even do 1 to 2, you risk 20 pips to get 40 pips. From here, you risk 20 pips. You're expecting price to come back. Okay, fine. From this area now, this is 443. So you can see, if price has played back downwards here, you can see the rejection. Price go down. So it means that price hits your take profit. But those that were greedy, that wanted 1 to 3, were the ones that price reversed and started going up. You can see when price got here, it's pushed up again and then broke it again. But price must give you a rejection. That's what price is. For if you are so you should follow your normal plan. Maybe you should look for a nice risk to reward ratio. In that way, you won't be losing a lot of trades. So another example now. That is just one example of break and retest. I'm still going to release a kind of part 2 of this video so you guys can understand it better. So the next one now, looking at our market structure, see a lower high, lower low. Now price has broken this area. Wait, we are not yet sure to take a buy. We can't take a buy now. Why? Because looking at this area, price can still react from this area. For you to take a buy, the major swing low, swing high, this is swing high and a swing low. The major area, this major last lower high must be broken and retested. So if price, so now price has, we're here, you could not take a buy, we wait patiently. People will be like, why are we waiting? Let's take a buy. It's risky. You can take a buy now and then price can just go up a little bit and start to go down. If price goes down now, I don't know, it's still wrong because market structure has not still changed. So you will still wait patiently. So for someone that waited patiently now, price has eventually broken this area. So next thing now, price has broken this, you mark the area again. Last time price broke this low. Last time price broke this low. This low. Imagine price went up then broke it. This low was the last low of this swing high. That's why price reacted there. So now again, price has broken this major swing high. So now we will mark that area because surely we expect a kind of reaction from there. So since price has broken this area, we're expecting a kind of retest. We're not expecting price to go up as in to change structure and start to form a trend, no. Because the way institutional traders trade, that look like that is still another video for another day. I'm going to explain it more deep on that one. So the way those traders, let me just give you a kind of tip that most traders will not tell you. Like the way the institutional trader they trade, they will mark this area. Once price has broken this major swing high, most traders now will take their buy from this area. Then putting their stop loss maybe around this area, and then they will be targeting maybe up. But institutional trader, they know what they're doing. So if you take your buy here, I won't advise you to hold your buy at this place. Holding a buy here is very dangerous. Why? Because normally liquidity traders look for manipulation. They cost a lot of money. Normally, from that place pointing now, what next? Once price breaks across a major swing high, price will not just react from immediately. And it might react for scalping. For scalpers, they might get a few pips from there, about 100 or 50 pips. But for a normal day trader, you're expecting price to still go further downwards to this area. If price goes back down now, does that mean that the trend has changed? No. It means that for this place to officially change, the way institutional traders trade is not more like before. They no longer take their position from this area again. They no longer take their position. Now they will take their buy position from this area. Maybe in my next video I will explain briefly. That will be a topic on its own. But now let me explain the setup now for break and retest strategy. So after price broke this setup, broke this major swing high, then price came back again to this area. Now you'll be wondering how you get your entry. Okay. So now after price came back here, you've marked that area. So the next thing now is to wait patiently for the setup. You can't just say price has gotten there. You need the confirmation to take the buy, which are candlestick patterns. So first I waited for price. Price from this, I know the sell volume was still there because of this large candle. So we expect a kind of longer candle to go down, which price did not. So another thing again I'm going to teach you guys is demand and supply zones. But maybe that's going to be in another video. I'm going to be breaking it down for you. So in this area again, after price broke this area, they came back to this area again. You can see price came back here to retest it. So, but taking this trade now, you'll be over risking it. I want to give you a kind of the kind of setup that once you mark the kind of zone for break and retest, that's a key level. The next thing is to look for a demand zone within that area. So you can go to, you can mark this one. I can see one demand zone now. You can mark this one like this. This is a kind of volume. This is area of volume. So you can see when price came back down to this area, price reacted to it. Then what happened is price zoomed back up. So for people that missed the first entry, sorry, let me change the color of the key level. So people that missed the first entry around this area, they can wait for price to go back. When price go back here, normally you're following your normal break and retest strategy, which is you're expecting price to break your swing high or a level of resistance and retest is fine. Price has broken it. But you cannot just take a buy here. Taking a buy here, you will be risking too much. You'll be in a kind of floating loss, and which you don't want to afford. So you want a kind of sharp entry. So when price touched this area, price reacted. You can see a lot of rejections. Price went to came back here again, rejected it, went back again, came back here. So what you should be waiting for now, this is still your zone. This area is still your zone, not this area. This area is just a demand zone to get a sharp entry from that area. So now when you enter a kind of trade from break and retest, you can be in a floating loss for about 25 pips. You'll be like, I floated along. But you wait patiently for you to get a kind of sharp entry. You draw a demand zone around this area. So when price comes back, price should react around this area. That's the way to get a sharp entry for that break and retest strategy. So in this case now, when price go back here, following your normal break and retest strategy, another tip I'm going to give you, you cannot wait for price to touch here and you miss the entry. You just wait patiently. Around this your zone, if you see kind of volume, example of volume is if it's kind of bearish, a bullish engulfing now, a bullish engulfing candle, it signifies that okay, there's volume now. That's when you can start taking your buy. But once you know that you miss this demand zone, any demand zone below that area, and you cannot wait for a kind of volume around your area of break and retest. Wait for volume. After that volume, that's when you can start taking your buy. If you don't see any volume, just leave the setup. Don't take any buy. Leave it. Don't take any buy. So imagine you missing this one. Okay, fine. No Allah. You waited. Then price formed bullish engulfing. Yeah, you waited again. This is now another sign. So from this point now, when I saw this bullish engulfing, I waited patiently. Then price came back again down to this area again. I waited. I said, okay. Since I've seen this bullish engulfing, I was 100% sure that no how. Volume is already here. So I took my buy around this area, putting my stop loss below this area. So you can see, I took my buy. You just need to have patience. Wait for the volume. The bullish engulfing signifies large volume. So when you take the buy around this area, next thing, I took my buy. My stop loss was below this area. So let me do this for you. You can go to smaller time frame so you can understand this further. So you can see the areas I took my buy from. Another reason again for you to take your buy, which I'm going to give you, another trick I want to give you guys. It's a very, very sweet, nice trick. I want to give you guys to take your buy. Now just check GBP USD. Yeah. It's around there, yeah. So looking at this one again, you can see price broke. This was another last lower high again, then lower low. This was a lower low, then lower high. The price came back. No, after price broke this area and went up. Normally, the way liquidity trader trade, price has already broken this last lower high. You wait for price to come back, not to this area again, but to the demand zone. And if you miss this demand zone, wait for volume, just like here again. If you drew here again as your area of entry, you have to wait patiently. I told you area. Like now, people that entered at the demand zone, fine, they got the sharp entry. You have to wait patiently because you missed the demand zone. See another demand zone again. So now price came back again to the demand zone again. You can see what happened. Price reacted. To draw a demand zone, you draw it from the beginning of the consolidation. That should be around there. We can still do it here. Then your risk should start with 20 pips or minimum. You cannot put your risk stop loss below this area. So you can see what happened. Some people that were here again, they missed this demand zone. Let's assume you missed it. This is your area, your break and retest area again. The price has broken its last lower high. Now I'm taking it to a smaller time frame now, so you can understand market structure. If you want to take a sell, and that if you want to take a sell in smaller time frame, you will see that there should be a kind of change in the market structure of smaller time frame. Then the smaller time frame chart should go with your setup. In that way, you have higher chance of winning. So you can see now the demand zone again in smaller time frame. So you waited for price to go. You cannot take a buy here. I told you earlier. Price must come back to the demand zone. So price came back to the demand zone. You missed the buy. Fine. When you missed the buy, I told you earlier, wait patiently. You must see a kind of big bearish and bullish engulfing. Price went up. No sign of volume yet. You waited. Okay. Remember, this is just a big candle, not a bullish engulfing candle. This one here. So you have to wait patiently. So price went here, came back, played around again. Then what happened next? Price now formed the bullish engulfing. Making you started this bullish engulfing. Next thing, no, there's no problem. You can just take your buy, or you can still wait for a retest. You can see price went back up again, then came back to retest the bullish engulfing. You can see again, and that sign around your zone. This is still your zone now. This is no more a demand zone you are planning. This is your zone now. So now your stop loss now, you took a buy from this demand zone. You should not risk less than from this area. You should not risk more than 20 pips, guys. From your area after you have seen the bullish engulfing, after price has reacted from the demand zone, you should not risk more than 20 pips from this area. You can see from here 46. You put a stop loss around here. It's even, you can see it's even much. For me, I might even risk 18 or 15 pips for this trade. And you know, use your normal risk to reward 1 to 2 and 1 to 3. If you're risking 15 pips, you should be targeting 30 to 45 pips. You know you are scalping. So if you can still take 1 to 7 if you like, because you know it's a retracement trade. So next thing, imagine you taking this trade now, targeting around this area from 45 to 85. That's about 45 pips. And meanwhile, you just 15 pips or 20 pips. That is just nice 1 to 2 around this area. You can see. Very nice. So when I took the buy around a very nice trade, I took the buy from this area. So let me minimize it again. Okay. Let's assume I missed setup. I took the buy from this demand area, which was actually very, very nice. From this area. Sorry. I have to make the chart color for a little bit. Okay. Then but this is just the kind of scalping trade because you are taking small pips. You should be watchful you should be mindful of your risk to reward. You should be very mindful of it. Once you say 1 to 2, your target should not pass 1 to 2 because because it's price you are dealing with. So what I did was that for this trade, I entered immediately the bearish and bullish engulfing was found, and my risk was just I think about 20 pips. Yes, I did not risk more than 20 pips for this trade. So taking this trade, and my take profit was around. My take profit was around this area. Yeah, take profit around this area. This was where I targeted around this area. This is where I targeted around this area. You guys might be like, why did I target close to this area? I will explain why. I will explain why. This was where my take profit was, and this was my risk. So calculating it now, let's calculate the risk. I risk just from year to year was about 527 to year. You see, that's about 23 pips. I mean, why I took this buy from this area. So I just took about 20 pips. Let's say 20 pips to 23 pips. So my target was 1 to 3, which was around there. 27 to price got to, you can see from this buy, from this your demand zone, but it does not matter. If you enter your buy around there, no still problem, there's no problem. Your risk will even be lesser from here. Your risk will be lesser than when you are taking your buy from here. This is the normal break and retest zone, a key level. So price went back to this area. Well, I'll tell you why I took my profit around this area. So let me delete I will now explain why. So zoom out. So looking at the chart, I was already seeing the kind of pattern again that we should always notice. It's called a kind of head and shoulder pattern. They call this QM most of the time, but it's head and shoulder pattern. You can see head, left shoulder, right shoulder. I was expecting the kind of right shoulder around this area. So I waited patiently. Then my target was around this area. I know around this area, Normally, there's always kind of manipulation. When you get here, price might first go up because of volume, then later on start coming down. So my top profit was around this area, and price touched the take profit. So that was one strategy. Normal strategy. I know most of these traders most of the traders that are on my channel now, you all use break and retest, but you don't trust yourself. That's the problem you're having. But if you maybe next video, I'm going to be breaking down demand and supply zones. That's what I'm going to be doing next. I'm going to teach you guys demand and supply zone so you can get it together with your key level to make your trade easy. So that is it for this video.